Hello, I'm Jonathan Moyes, Head of Investment Research at Wealth Club, and today I'm with Richard Hope of Hamilton Lane to talk about the investment opportunities in private markets. So we're here today to talk about private markets. Firstly, what are private markets?
So Jonathan, private markets is essentially investing into assets which are not listed on the public stock exchange, principally through funds, but also direct investments. And these could be private equity, private credit, infrastructure, or real estate.
Okay, and private markets have been growing in popularity for some time now amongst institutional investors. What do you think is driving this trend?
Yeah, so Jonathan, private markets have grown enormously. So today, the asset class represents approximately $6 trillion. And there's approximately $1 trillion per annum flowing into the asset class. And so what's capturing that attention? Why is there more money flowing into the industry? Well, one big reason, which is private companies are staying private for longer. They're actually staying away from the public markets. And what we're seeing is actually those institutional investors, those public markets investors, are actually increasingly starting to carve out a piece of their portfolio and invest in those private companies ahead of those public market introductions and coming to the public markets. Also worth noting, private markets has been very stable, and so we've seen huge volatility in the public markets, particularly over the last couple of years, and that stability of returns in private markets has been very attractive. And lastly, the returns. They've been very strong and they've outperformed over the short, medium and long term those public market comparables.
Sure. And so what areas of private markets are you currently finding most interesting? And could you give us a few examples?
Things that we find interesting today: secondaries, very interesting, big and growing market, and co-investments. Also, as we look through to the underlying companies, those technology businesses, those software as a service businesses, huge appetite for those type of investments, and we've seen an awful lot of activity in that area. Also, for those a bit more defensively minded, those healthcare investment opportunities have been super attractive. And if you think about the backdrop in the economy, where we've had zero growth for a long time, anything that has growth related to it has been hugely attractive in private markets.
So you mentioned secondary investments there. What makes a good secondary investment? What are you looking for?
Yeah, sure. So as I mentioned, the industry today is about $6 trillion in assets under management. Yeah. So it's big and it's growing. Now, private markets has been known as very long dated. So investors invest over 10 years and that money is locked up for 10 years. But not everybody wants to be invested for that 10-year time period. So here what we've got is an asset class that's evolved because people want liquidity from their portfolios. They want to sell before that 10-year or that 15-year time horizon. That could be funds, it could be portfolios of company. So you see a big shift in the industry. And so today we see an industry which has got about $100 billion of tradable assets. In terms of the features, and you asked about the features, things that you will see there: shorter duration, so not locked up for that 10 or 15 years, nearer term liquidity, so you get the benefit of those exits before the companies come. So duration, liquidity, and also you beat the J-curve. Now, private markets, as you may know, has a history of sitting in a loss before generating those profits. For us, that's not acceptable. You want to beat that J-curve early and have strongly performing portfolios.
So we've heard that the institutional investors are increasingly allocating to private markets. Why should private investors invest in private markets?
Yeah, I think one of the big things for private investors is they've been cut out of the market. Yeah. And so you've seen huge minimum investment requirements, so maybe $5 million or even $10 million to access those private markets investments. And that's very difficult. You need to be a very substantial investor to get there. But as I said already, private markets has outperformed the public markets, and it's also had much more stability within the portfolio. And so those private companies that are staying private for longer, those private investors can't access them. And so figuring out a way to be able to invest into those is very important.